My name is Megan Robin. I am a California tax attorney, and on my show, I break down complex legal, small business, and tax topics into simple, actionable advice. Today, we are diving into something that every business owner needs to know about: a legal doctrine known as piercing the corporate veil. What is it? Why does it happen? And most importantly, how can you avoid it? First, let's define what I mean by piercing the corporate veil. Normally, when you form a corporation or LLC, the business is treated as a separate legal entity. This means that your personal assets, like your home or savings, are protected from business liabilities. However, in certain situations, courts can pierce this veil of protection and hold you personally liable for your company's debts or actions. Now let's clear up a common misconception before we move forward. Piercing the corporate veil doesn't just apply to corporations, it applies to LLCs too. A lot of people think that because LLCs have fewer formalities than corporations do, that they don't need to do anything beyond filing their initial paperwork. And with so many services offering quick and cheap LLC formation, it's easy to fall into this trap. But here's the problem. Forming an LLC is just the first step. These services often don't tell you about the ongoing responsibilities that you have to maintain your liability protection. In fact, courts can and do pierce the veil of LLCs when owners treat them as personal piggy banks or fail to operate them as a legitimate business. So while forming an LLC may seem quick and easy, staying compliant and protecting yourself requires ongoing effort and attention. Now that we know what it means to pierce the corporate veil, let's talk about how to prevent it from happening, because you never want to lose your liability protection. Here are my top tips for keeping your corporate veil intact. First, keep your finances separate. Always use a dedicated business bank account and never mix personal and business funds. Second, follow corporate formalities. Hold regular board meetings, even if you are the only shareholder. Keep minutes and document major decisions. Third, make sure your business has enough funds to operate responsibly from day one. This is known as having adequate capitalization. The next one should be obvious. Be transparent and honest. Avoid any actions that could be seen as fraudulent or misleading. Next, maintain proper records. File your annual reports, pay your taxes on time, and keep detailed financial records. Last, use contracts correctly. Always sign contracts under your business name, not your personal name, to reinforce that separation between you and your company. If you found this video helpful, share it with a friend and let me know in the comments. What questions do you have about starting or growing your business? Thanks for watching.